Welcome to Absolute Trust Talk with your host, Kirsten Howe. Absolute Trust Talk brings you tips, tools, advice, and interviews to help you build a reliable knowledge base on estate planning, business, and finance to start preparing for your future today.
Hello and welcome to Absolute Trust Talk. I am Kirsten Howe. I'm here with a guest today in our video podcast at Absolute Trust Counsel, and we're going to be talking about valuations. Let me explain that a little bit. In my business, we spend a lot of time focused on our clients' assets. That's the nature of what we do as estate planners and administrators. And probably the two most important questions that we have about any given asset when we're working with our clients is, number one, who owns it? Number two, what is it worth? And of course, our regular podcast audience knows that we talk about ownership and titling issues all the time. We are constantly hammering home that you need to own your assets in a trust and what the consequences of not doing that. So fortunately for you today, we're not going to talk about ownership and titling. We're going to talk about the more fun, interesting aspect, which is valuation. And to help us with that conversation is my colleague, Alex Beatty. Alex is a valuation expert. He's a partner with Bridge Forensic CPAs LLP. They're here in Walnut Creek. Alex has extensive experience in business valuation, family law forensics, private industry experience in healthcare and physician compensation. And we'll talk a little bit about some of those things. He is a CPA. He's accredited in business valuation, and he's also a certified information technology professional, which is a nice bonus that his firm gets by having him working there. He's not just a numbers guy. He can take care of the IT. Alex has qualified and testified and been appointed as a courts expert in pretty much all of the courts in the San Francisco Bay Area and the Sacramento area. He's worked on thousands of litigation matters. He works primarily in the family law area, but we work with him as well in estate planning. He's commonly asked to perform post-separation accountings, analysis of real property interests, and we'll talk quite a bit about that, equity compensation, just all the kinds of property issues and income issues, all of that stuff that happens in a divorce. And also he works in what we call business divorces because a lot of those same issues come up. Alex, welcome. I'm so happy to have you here.
Yes, thank you so much for having me. And so it's and what we're doing is trying to evaluate and compare that to other larger publicly traded real estate holding partnerships and things like that. We're looking at other comparable partnerships that and lots of market studies about these types of issues to really quantify the issue itself and then how it applies to the specific entity. I've seen some, in it. So a lot of the core pieces of it go back to the underlying LLC agreement,
right?
Because that's really where the meat of, what control you have, what control you don't have. Some LLCs require a supermajority to do anything. And so if you own a 5% interest, you really don't have much of the ability, but in some sense you might, because if the only other person, if everyone else owns like 30%, that 5% could be kind of the tipping factor potentially. Yeah. And so
they need you. Yeah.
They might need you. And so there's a lot of these evaluations of, what the structure looks like, who's relative to the other components of that, and what does it take to actually sell or transact or effectuate some sort of a change. Those are all really important for us to consider and evaluate as we balance out what the kind of relative discounts are.
Yeah. And one of the things that you and I talked about when we were kind of preparing this episode, and yes, we do prepare, maybe the dynamic among the owners might factor into it. So a lot of times this is a family situation, and maybe this was set up by the parents and now the children have become owners, and maybe the children own 49%, but they're never going to vote contrary to their parents. They're always going to just be lockstep. And so that, I would guess, maybe affects the value of their interest.
That can come into play. Certainly we look at the interplay of the relationship, especially also if we're looking at the valuation as a whole in the context of maybe all these other assets. So it might be that dad has only 10% ownership, but and the two kids maybe own the other 90%, but then also dad has his finger on all these other assets. And where I find more often this really comes up is in the context of a divorce. So this is, if dad's getting divorced and says, I only own 10% of this, and, I can't really control if this distributes money to me, but then he's now got a finger on the two kids and they're the controlling party. But is that really a control? Is that kind of an implicit control? So there can be these really, quasi-control type of narratives. They can be relevant for evaluation under gift and estate tax, particularly the more they get explicit, it makes it easier to quantify. But more in the litigated type of disputed areas where I find that those become a lot more salient. And we have to work through those potential concerns with attorneys and things like that. It can be pretty dicey when you're having to untangle all of these really close relationships.
Yeah, that you brought up an interesting point. Maybe dad is only a 10% owner and you could outvote him. You have the votes, you could override him, but dad has 15 million other assets that if he dies someday, you're going to get if you're a good boy. But
right.
So there's all of that, all of the family dynamic.
Yeah, those are also the implicit versus explicit control, and I guess sometimes in the context of the valuation, we're a little bounded on having to look somewhat siloed, and we're looking at this entity, this 10% interest. Sometimes it's specific to this specific member interest. Sometimes it's more of a broader kind of hypothetical 10% interest. So it depends on the valuation structure on whether we dive in, how far into that pool we dive into, but when we're dealing in if I'm dealing with an estate or a family, dispute type of matter, it becomes extremely relevant because of the potential distributions, for example, that this LLC might give off. And, surprisingly, oftentimes those stop as soon as there's a dissolution filed or something like that.
Yeah.
So it can get really complicated in terms of the other contexts that they have. It can get really convoluted especially in an estate world where it's not just one interest that we're valuing. So we have this LLC, but then we're also valuing, LLC A, B, C, and D. And the interplays of control between those entities can be really relevant.
Right. Okay. And I was going to ask you, this is something that I was thinking about earlier today. And then you said something that made me say, oh, I should ask that because I've never known this. When we have these privately held entities with multiple owners and there's an operating agreement that could result in discounts being taken, we want to do that if that's to our advantage. Usually that's a tax thing, or in a divorce, that's a whole other thing. But does the IRS require that you take discounts when you can, or can you just say, nope, it's worth this much?
It's my understanding that the IRS does not require you to take them. So if you want to take the prorated approach, you're generally free and clear to do that. But if you want to take the discounts, you need to perform and have kind of the backup and the research specific to your subject interest, which is really where we get involved. And so I do find that is, if someone's on the cusp of the forever changing estate tax limit and this business or interest isn't really gonna to move the needle, then it's probably not something that they go ahead and necessarily need to substantiate. Where we have to get involved almost no matter what is if we've been talking mostly about family real estate partnerships. That often sometimes it's not a real estate partnership, it's an operating entity. The family business is a manufacturing company, and so there's not a way to just get a number on that. You have to do a valuation. But then because of that, we're then going to incorporate discounts and things like that as well.
Yeah. So that's an interesting point, because then if we have the option of not taking discounts, then you're kind of balancing, capital gains tax down the road kind of thing. We could take the discount and then we're kind of shooting ourselves in the foot if we ever sell this thing. But so that's interesting. I had not really thought about that, but we need your help to value this entity because it's an entity. It's not just a piece of real estate. It's more than that.
And some of them can be very simple and you can almost kind of get through that without needing to go. But I was telling my team when they're like, "Oh man, this whole thing is really complicated." I'm like, "I know. That's why we're involved. If it was simple, we wouldn't be here."
There wouldn't be this whole industry of valuation. Yeah. That's why I wanted to have you on, because I think a lot of people don't really realize how complicated this stuff is. And that I'm not trying to discourage anyone from setting up an LLC. If that's the right thing to do it. There's a lot of value to it, but you just need to know on the backside, you might have to do something like that. And there are other, I'm just going to call them weird assets, but they're not weird, but assets that people probably don't really think about that need values, and they're not values that you can just easily look at a piece of paper and go, oh, yeah, I know what that's worth. So here's an example of something that we have hired you to value is a promissory note.
Yep.
People don't think of that. Somebody owes you money. They signed a promissory note. What is the value of that on any given day?
And it can change by its, interest rates can do a number on those assets. And it really depends on, yeah, like you said, and because typically you're concerned about what is it worth, not maybe as a general investment sense, but really, at this estate date or the alternate valuation date, if elected, what is it worth at that point in time? And that's really the only date you care about, but it is relevant because there can be impairment of that loan. It could be the interest rate environment could have totally flipped on the loan, and it could maybe not be as worth as much as you thought it was at the
when you
point in time.
First made the loan. Yeah. Other things like accounts receivable, those are assets. And that's something that you would also be able to help with valuing, because it's more than just, okay, this much money is owed to me. This much money has been owed to me for a year and a half. This much money is just 30 days out. There's a whole art to it. And that's something that you do for our clients as well. Alex, we're getting to the end, but before I let you go, maybe you could talk about the most unusual, challenging, weird, interesting asset or valuation situation you've been in without naming any names.
Yeah, sure thing. I think two really come to mind. One, just because it sticks out to me as something that seems so basic, or just that I would totally miss it, was I valued a company that quite literally made rags. That's what they did. They took just lots of scraps of cloth and made. And it struck me because it's something like I
that's a
rags all over
business.
my house. I can just, but this is like what you make, and they make these in just these big commercial blocks of rags that they would distribute to auto mechanics,
cleaning company,
cleaning company, all kinds of places that need just bulk rags.
A steady supply of rags.
And just one of those fascinating little things to me of that you just shocked that you're like, of course someone makes that, but it just didn't occur to me.
Yeah.
The other really strange one is I had a company that was they did a lot of hedge funds and things like that, so they had a lot of kind of alternative investments, and one of the things that they were really involved in was weather derivatives, which I thought was a really fascinating type of industry. So a lot of their whole game was essentially kind of a way of an insurance product, but essentially the way they would do that is trading in weather derivatives. If and when a storm happens on this day, there's a payout and things like that. So it's a really fascinating kind of model that I find the world of turning things into derivatives really fascinating.
Mm-hmm.
So the fact that we turned weather into one was quite interesting.
That is interesting. There's so many, legal ways to gamble on things that the average person would never dream of. And yet there you go, weather derivatives. If you want to gamble on the weather, there's a market for that.
Yep. And that's are we gambling, or is this, in the way it was being used, I think was really helpful as a protection kind of hedge about,
it's a hedge.
Planning this really big event. And if it rains, this would crush me because of, X, Y, and Z. But, fascinating kind of idea of how they're, modeling that and trying to predict the weather, which I thought was fascinating.
Wow. Yeah. That's a very interesting and unusual asset.
Yeah.
Did it make you want to run out and purchase weather derivatives?
No. I think I'm going to steer clear of this, but anytime I'm looking at an insurance product for traveling or something like that, it always makes me think of that though. Like someone's
betting on
that out there. Yeah. That's why I'm paying way too much to insure this trip or something like that, I'm sure.
Fascinating. Well, thank you so much, Alex. I really learned a lot talking to you, and I'm sure my audience did as well. My guest today has been Alex Spady with Bridge Forensics CPAs LLP. I hope you all learned a lot, and I hope you'll join us next time, and I look forward to connecting with you then.
Thanks so much for having me.
Thank you for joining us today for another episode of Absolute Trust Talk Live. If you enjoyed listening in, then don't forget to subscribe. You can find us on Apple Podcasts or wherever you may listen by searching Absolute Trust Talk. While you're there, we would also love for you to leave us a review. And then why not share your favorite episodes with family, friends, or colleagues too? You can find all of our shows and corresponding show notes by visiting absolutetrustcounsel.com. You'll also find a variety of other free resources, including our ebooks, videos, blogs, presentations, and more. If you need help with your estate planning or administration, we also offer a free discovery call to help get the process started. You can find more information on booking your session by visiting absolutetrustcounsel.com/scheduling. If you join us for the broadcast, you can submit questions during the show. But if not, don't worry. You can always get in touch with us by sending a quick message to info@absolutetrustcounsel.com. Thanks again for listening. We'll see you soon.
This podcast is not meant to take the place of legal advice from an attorney and does not create an attorney-client relationship. If you do have a legal question or issue, please consult with an attorney.